So this is how you get your entries when you want to trade on Binance Futures Trading, whether you're actually using the top gainers or losers strategy that I've taught before. First thing you need to do is come over here and frame your directional bias, all right, from the daily time frame. So we come here and then we just tap on, this will be our directional bias. Directional bias from the daily time frame. Want to know the overall trend. Are we bearish or are we bullish? That's the first thing we want to know. Now, once we're able to decipher that, it's very, very easy to trade alongside prevailing trend. So we can see here we have break of structure to the downside. Price came back here again. Formed an inducement here. Right, before coming back to this point of interest. Now, one of the most interesting things for you to understand or to catch is that price does only two things, all right? Price will either break a low or high or come back to fill an imbalance. Two things. It's either going to break a low or high or come back to fill an imbalance or to rebalance itself. So basically, that is what price does. So now that we have a break of structure already, let's put this in white. I have a break of structure already. So we want price to come back to fill some imbalance or POI or point of interest, whatever you want to call it. And I can see there's actually one here. There's another block here. There's another block right here. There's another block right there. Price has tapped into it, and obviously we are now selling. So from the higher time frame now, we are bearish. So all we need to do is look for this same schematic. Let me draw it out. We look for the same schematic like this on the lower time frame. We look for this exact schematic. This is with USDT. So price is mitigating from this point here, and price is actually falling. So higher time frame bearish, bias is right. All we have to do is look for this setup in the lower time frame. Now we scale down to 1 hour straight. I'm not going to use the 4 hours because I'm starting my analysis from the daily. If I was going from the weekly, then I would have made use of 4-hour time frame. But this is just absolutely sweet. Okay, this is a sweet trade. Now, our bias is bearish, right? Remember, don't forget. So remember what I said, that price will break structure and come back to fill an inefficiency or rebalance the market. That is what price will do at every point in time. Now, price has done the same thing here now. Can you see this break of structure from the BOS here? Now, price has done this. Have a BOS. Now, we want to look for fair value gaps at the premium level. We have big order block here. Can you see this? We have a big order block somewhere around here, right? That price is tapping into. And of course, we have a sweep of liquidity. The way I draw my order block, I usually use, okay, let me put it on 4 hours so that you see clearly now. See, I usually use the bullish candles that actually created the sell, right? Or you could just come back to this fair value gap right here, the fair value gap here. Take this one, fair value gap here, that's not been filled completely. And you can see the way price just came back to fill this fair value gap, sweeping liquidity here. Now, we already know we are what? We are bearish, so we have no business trying to buy. We have no business trying to buy. So for the entry, the same model, the same schematic that I gave is what you'll be using. The same thing you'll be using. So look at breakout structure here. What will price do next? It's going to go back to a fair value gap to rebalance itself. This happens all the damn time. Can you see? It's going back there now to rebalance itself. This is what price will definitely do. Come back, rebalance itself, and then move. So here's our point of interest here. We already have price mitigating this zone. We already have price mitigating this zone right here. Right, we have price mitigating that zone. And then we had a breakout structure to the downside. And price coming back again to fill this imbalance here. See how it fills the imbalance? Created another what? Breakout structure. Now price will come back again, go back again, and fill an imbalance. So it's just a cycle, basically. It's just a cycle. It's just a cycle of the market. So I would want to enter from here. I've already set my limits. I would get in from that region. Come here, put my stop slightly above this zone. You can see this clearly. Slightly above this zone. Then I will go for the extreme low, because all of these points will now be what? Liquidity. Put this to be very dark. All of these points now are going to be what? Liquidity, because we have failure swings here. We have failure swings. Failure swings. All of these failure swings that did not break or form a new low for sweeping liquidity. So all of these will act as what? Liquidity for the market to push. So this is how you frame up your bias from the daily time frame. Now we understand that the daily is bearish. We trade alongside with what the daily is already doing. If the daily is bullish, trade alongside with the bullish sentiment. But since the bias is bearish from the daily, all we have to do is look for sales, look for this same schematic, breakout structure, rebalancing into fair value gap, breakout structure, rebalancing into fair value gaps again. Just keep repeating the cycle many times as possible as you can. So I would get my entry from here and then begin to sell to this point. So I'm targeting a 1 to 4 RR, targeting a 1 to 4. Yes, a 1 to 4 RR as my target. And once I get that, I'm done. So cheers, guys. One love. Peace out. See you in the next video.